Oh man, so a worrying sign flashes on the Bitcoin chart as we open up for a critical week here for the crypto market. There is some good news in that we reclaimed a very important level, but the bad news sits on a daily time frame, which I have to share with you and has some investors and traders spooked going into this week. Guys, smash on the like button. Don't forget to subscribe. As always, if you want to buy any crypto, you can check out OKX. Link is in the description, which I'm going to be showing you a lot more about because they've got a very interesting dollar cost averaging feature, which I'll be sharing with you in future videos. Now, as we can see on the Bitcoin chart here, we've had 3 days of red, right? 3 days of red, Friday, Saturday, and Sunday, and now you can see Monday opening up fairly flat here today. And the positive news, which is what I shared with you over the weekend, is we managed to claim something called a higher high, right? We're keeping this uptrend. We've got a higher lows, we've got a higher highs, and this looks like a very nice uptrend. But the worrying sign is when you look here, you are getting something called bearish divergence. Remember, and guys, if you don't know what this is, I cover this all in our education program, okay? We have a TA education program with over 50 lectures in there, which you guys can get access to. Message me in the Discord, ijaz.uk/Discord. Link is in the description, and message me over there if you want access to that. And as you can see, you've got this increasing price action, but you've got this sideways / slightly downwards lower high here on the RSI. This indicates a divergence, which often means that the price can start to head sideways, if not slightly down. It means it's very difficult for it to maintain its current price movement. So that's one thing which is worrying traders here on the daily chart. Now, on the weekly chart, what I want to share with you is a very interesting level which we've managed to hold again. Reclaim. Remember this 200-week moving average, which I've been speaking about for a very long time, which Bitcoin has held up as support every single time and then gone on a big run? Well, we finally managed to reclaim it. We broke down below it about 5 weeks ago. We spent 1, 2, 3, 4, 5 weeks below it, and on the 6th week, which is the week just closed yesterday, we managed to close above it, and it was a crazy week, right? We wicked all the way up to 24,700, eventually closing this candle at 23,294 above the line. Now we're getting our confirmation candle, which is another candle. We also retested it as support intra-week, so this is really good now. We've bounced off of it as support as well intra-week, which is a good sign here for Bitcoin as well. Now, heading into this week, what is the landscape? Well, we've got Fear and Greed Index sitting at 33. That has notched down from 42 just a couple of days ago and 39 yesterday. So a little bit of the fear is starting to come back in the market as we're struggling to break that 24 level. A lot of those, crazy bulls who are like, we're going to head over to 48,000 in 1 week and 2 days. Yeah, they've kind of shut their mouth now, and people are being a little bit more realistic. Now, I'm going to give you my exact stance of what I'm expecting, but let's take a look at the pre-market, because I do want to share with you how equities are doing, because equities have just had their best month. July was the best month for the year, okay? So Dow Jones finished the month up 6.7%. S&P 9.1%. Nasdaq, which is heavily correlated to Bitcoin, the high-risk tech stocks, 12.4%. Really good sign. And what we're seeing here on the pre-market is we're getting a little bit of redness coming in. I'd call it flat, right? 0.2 down slightly here, 0.3 here on the S&P, and 0.35 as, again, big earnings coming up this week, and the market is feeling a little bit apprehensive, right? The likes of Pinterest, Devon Energy coming through today. We've also got the likes of Uber, BP, AMD, PayPal, Airbnb, Starbucks, SoFi tomorrow, Moderna and Robinhood later in the week with Lucid, and then a few more later in the week, including Twilio, Block, AMC, DraftKings, etc. Okay, so we still have a jam-packed earnings calendar with many companies still to produce earnings. We've also got a few Fed officials speaking during the week. You've got Fed Evans and Bullard on Tuesday. Bullard is the one I'm worried about. He's the hawk. He tends to come out and say horrible things, but if he comes in a little bit dovish, market's going to carry on their rally, right? This will be good news. We then have Mester on Thursday, but more importantly than all of that, on Friday, we get our non-farm payrolls. Now, why are these non-farm payrolls so important? And yes, I know this is boring. This is a crypto channel. I should be showing you some crazy chart pattern and some sort of like balcony overlooking some fountain. But the reality is non-farm payrolls is what's going to move the market. Okay, because the market right now is rallying off the back of thinking that we have just gone through peak fear. So they're creating this bit of a relief rally, and they're hoping that this paper recession is a paper recession. And the only way this paper recession is a paper recession and not a proper recession, right, is if labor market continues to remain strong. So if this labor market, as measured by the non-farm payrolls, which we'll get on Friday, starts to show that it's really starting to tighten. It's getting harder to get jobs, right? Unemployment's going up. That could be a concern, because then you're starting to fall into the normal definition, even by Joe Biden standard, of a recession. Okay, this is really, really important, because then you're going to have your declining GDPs, have your unemployment. If wages start falling, then people start spending less, then demand falls, then companies' earnings will fall in the next quarter. Then this could be a proper recession in a few months. So what many analysts are saying right now is this could be a relief rally for a month, or just lasting a little bit of the rest of the summer, and then a winter of more pain as we realize we're in a proper normal recession. Okay, so that's what we're looking out for here in the market, and that's exactly what I've said to you continually on the Bitcoin chart, and I love it when the technicals marry up with the fundamentals of what I've been saying to you. And if I, again, just get ourselves a clean chart, what have I said time and time again? If anybody's been watching my videos for a while, and if you haven't, make sure you've hit up the like button, make sure you're subscribed, then what you remember I said is I'm open to having a relief rally up towards that 30k level. And if I head over to the weekly, you'll see why, right? Because on this weekly chart, you can see we're super overextended. This is the same as the equity markets. Huge, crazy valuations, very overextended. A lot of bad months we've had in a row this year. So I'm happy for us to have a run up here. I think that's justifiable. The technicals show me that. I don't have any cognitive dissonance that could play out. That can play out, right? And I'll be more than happy to trade that. Now, what I do have a bit of an issue with is those saying that, oh, we're just going to run straight back up to 69. Like, I don't see evidence from the charts, nor the macro fundamentals, which we've just discussed, that says that. Now, that can change over time as more data comes out, and I'm open to making my viewpoint fluid. I don't get emotionally attached to my decisions. I judge it based on the data, and I'm happy to pivot. But right now, all I'm in play for right now is potentially a relief rally, but I'm still ready for more downside. I still think the economy is bad. I still think things haven't been fixed. I still think there's supply chain issues with China and COVID. I still think there are macroeconomic issues. Inflation is clearly still very high, right? I don't think this has suddenly washed its way away. But what I do want to take advantage of is I think a lot of people can get surprised by quick relief rally. And I don't want to be the person that says, yeah, I just think we're going to go to the downside, therefore I'm not going to participate in this. I'll participate in that, knowing fully well that we could see that to the downside, okay? Hope you guys enjoyed this video. As always, don't forget to smash up the like button and subscribe. If you haven't checked out OKX, definitely go check out OKX. Really good exchange. They're partnered with Manchester City Football Club here in the UK. So if you're UK based, you know they're a serious exchange. Also, they've got that really clever dollar cost average feature, which is the only reason I use it personally. And I think that's going to be the key for me here, is to use that feature to be able to create pies which we invest in. Because at the moment, we've got a lot of good strategies with our exchanges for trading, but what are we going to do for our longer term dollar cost averaging? I'm going to come up with some really clever pies which we can use here on the channel. So make sure you got yourself set up, have a play around with some of their recurring buy features, and I'll see you in the next one.